Welcome to the session on Youth and Informality Designing Social Protection for All. Thanks everyone for joining. With the informality at the center of many developing countries because of changing labor dynamics and the emergence of new forms of work, such as gig work, traditional social insurance systems are not adequately responding to the needs of many young workers. And in addition to this, many young workers, due to their lack of stable incomes, may face income volatility as well, which can then make it difficult for them to participate in social insurance systems. And the result is that they remain in the informal sector without social protection. This then raises the question on how can we innovate and develop new solutions that cater to the needs of all young workers. And this is exactly what we will explore in this session. How can innovative designs and solutions be developed to ensure broader access and enhance social protection for all? To talk to this interesting and at the same time challenging topic, we have three fantastic speakers with us today who were really kind to join us to share their innovative ideas in this space. First, we will hear from Parul Khanna, the co-founder of Pinbox Solutions, a digital micro-pension solution. And we will from her on how technology and micro contributions can help more people to save for retirement. And Parul will be followed by Badal Malik, the co-founder of Karma Life, a firm that uses data and technology to offer gig workers earnings-linked finance solutions. And Badal's presentation will focus on the importance of adapting solutions to workers' irregular incomes. And last but not least, we will hear from Olivier Azuara, senior economist at the Labor Markets Division of the Inter-American Development Bank. And his intervention will be on the Laboratory of Social Security experience piloting innovative social security designs in Latin America region. Now, we have 30 minutes for this session. Each of our speakers will have 5 minutes to present. Kindly stick to 5 minutes, please. And following their presentations, we will have a Q&A session. Now, without over ado, I'm handing over to Parul to start her presentation. Thank you.
Thank you very much, Melis, and a pleasure to meet everyone here along with my co-presenters. I represent Pinbox, which is a global social pension tech that helps build inclusive micro-pension systems for self-employed women and youth in Asia and Africa and Latin America. Well, if I talk about the problem, why we sit here and talk about social security inclusion is because you could take it as a multi-trillion-dollar crisis, or you could take it as a new market opportunity. And when I say this, I'll share some numbers with you. There are about, excuse me, 600 million salaried workers with pension benefits globally, about 1,200 million self-employed without pension benefits, who can afford to save and can be reached out through trusted aggregators. And then there are about 600 million excluded workers who will never be able to save. But if you see these numbers a little more in depth, especially for the informal sector workforce across developing countries, 75% of the workers in Asia, Africa, and Latin America are not eligible for pension benefits and also not saving for their old age. 1.5 billion will be destitute elderly by 2050 without any pension benefits. About 30 trillion US dollars is the cost of tax-funded lifelong pensions of even $2 a day to the future elderly. About Now, if I come to the positive side and see what the market opportunity is, about $500 is a monthly pension at the age of 60 that a 20-year-old today can get if they start saving only $1 a day. And the other opportunity on the macro side is there will be about 15 trillion USD aggregate new long-term savings within a decade if the quarter of this excluded starts saving only $1 a day. Now, this is a gigantic unmet demand. The building blocks already exist. It's a comprehensive, national IDs, payments, broad-based digital IDs, near universal mobile pension, and so on and so forth. But, however, it is still not yet easy and simple for most people to save for their old age and manage life cycle risks. And now there are certain supply side barriers which prevents countries and pension funds from expanding coverage to informal sector workers, and these are real problems, right? So there are these legacy pension platforms that are talking to formal sector workers where the pensions are mandatory going out of the salary workforce. So what is the solution? You can have a specialized pension tech, which is designed specifically to administer and deliver voluntary micro pensions to non-salaried workers and customize it according to their income. The other barrier is high cost, startup cost and a long time to market. This is because it is just too expensive to build pension tech from scratch. The solution could be that you have over-the-counter variable cost solutions which use APIs and allow for a pension tech to be opened within, like a switch on, within a few months. It's possible to do that. Pro-rich sales models, that means most of the agent-led models are more inclined to selling pensions, insurance, and other savings products to people who are like me or people who are listening as an audience. But what we really need to do is democratize pensions, which is to say that citizens have to be familiar with the interface, with the UI UX, whether it's a USSD phone, whether it's WhatsApp, we need to adapt. Coming to some supply side barriers, there are a lot of frictions, right? And I'm sure Olivier, when he talks about the lab that they worked on, is around cumbersome KYCs, paper-based solutions. They're very inhibiting for people who come on and volunteer to join pension schemes. And one such example could be a form that I've tried to put out here, which is a 6-page form, which is in English. And in India, probably people can't read English either, especially it's such a diverse country. One of the solutions could be that you have a very simple UI UX, which we use at Pinbox through USSD phone or WhatsApp or web. It doesn't matter where the person is onboarding from. The second demand side solution, sorry, I'm not going into a video. I would have shown you a demo otherwise. The second demand side approach is rigid product rules, which means that most low and lower middle class income segments have very modest, irregular incomes who cannot afford large regular contributions, or even their incomes are ad hoc. So how do you find a solution? What we do is we let the subscribers have to save in line with their own capacity and income flows, and there are no penalties for missed contributions. The third way to do it is the other risk that is on risks and savings, that is most informal workers are uninsured. They use savings or expensive loans to meet risk, which leaves them no room for savings for their old age. I think what is required is integrated products. You have to layer pensions with insurance, risk management, short-term, long-term savings, a liquid micro SIP, which allows them to reach their emergencies, children's education, and marriage. Members have to enjoy a single window interface, otherwise it is far too confusing for them to manage pensions in one product and any other product according to their other needs. The last and the final one is really around myopia and low confidence. People have negligible knowledge and prior experience on formal finance, which reduces public confidence and inhibits voluntary uptake. This is very important to understand, and it's probably one of the big barriers that we see, because retirement seems way too far for everybody, especially in the developing countries, as we see. The solution could be, and which we have seen in Asia and India, where we work, and in Africa and Kenya and Rwanda, where we've had extensive success. Trusted field partners who deliver financial literacy, cross-sell solutions, drives clients for uptake, and more importantly, drives persistency. Because what matching contributions in the case of Rwanda with a scheme called Ejoheza, it had only covered about 5% of the population 4 years ago. Today, there are 55% of the population in the informal sector workforce, which is joined the scheme on voluntary basis. The other trick and management to have is that trusted avenues also allow for adequacy of savings,
Parul,
which is another important part. Sorry,
Parul,
I've
can I?
finished already. I'm on the last slide.
Thank you.
Thank you so much.
Okay. Thank you so much for this interesting presentation, and I think you'll have a chance also, Parul, to answer, to talk during the Q&A. Now we will go to Badal. Badal, please start your presentation and kindly try to stick to 5 minutes as well. Thank you so much.
Thank you. It's a pleasure to be here. I'm the co-founder and chief business officer of a platform called Karma Life. We are an affordable and sustainable earnings linked finance solution. We address routine cash flow volatility issues faced by workers, gig, contract. Our mission is to build their financial resilience and help them achieve their aspirations. Before I start, I just want to spend a couple of minutes linking pension to credit, because I think that link is important. So, social security systems, typically solve the intertemporal trade-off, right, between money now and money later, and it's in the favor of the latter, right? And while this is understandable, this long-held policy could warrant a relook, particularly when you look at a couple of data points. One, that particularly talking about India, the median age is 28, and our household debt to GDP ratio is about 36.5%. Right? So it's much lower compared to economies of similar size. So in other words, credit is underpenetrated. Further, I mean, if you add the data point that 92% of India's workforce is in the informal sector, overall what we're saying is that the underserved, the consumer, a very significant fraction of the consumer base is underserved to credit, and that is because of low disposable income, right? And these are the same folks for whom, who are most exposed to a downside risk that can, lead them into debt spirals. So that's kind of like the problem. There are ways to use, I mean, in India, there are ways, as well as in other countries, there are ways to use pension, and sort of prematurely draw it, right? That's not a classical loan. What happens is that the corpus is permanently impaired to the extent of the withdrawn amount. It reduces the corpus available for retirement. There are restrictions around, various end use cases, and ease of living is not covered. Just from an ease of access or timeliness perspective, or even eligibility, there can be bureaucratic hurdles. So I just wanted to kind of, build that context, which is why we do what we do, which is to, focus on, I mean, our entire product is based on allowing workers to access small ticket credit, small funds, short cycle funds recurringly, with ease, right? So it's sort of solving that everyday liquidity issue, right? 83% of workers are run out of funds before their next payment. 70% are dependent on friends and family in India, as well as money lenders and employers for small loans and credit. They have typically under-indexed credit bureau scores if they're covered, and that leads to financial vulnerability, mental stress, work disruptions, and overall a reduced quality of life. So moving forward, there has been some recent work done on gig worker income and expense volatility in India, which is done by Dwara Research. I won't go into the details, but you can see that the coefficient of variations here, both on the income and expense, are pretty high. right? So this is the reality of daily workers, gig workers, platform gig workers in India. We can go ahead. I'll move to the and this is, we are talking about a very large a very large segment. We cover, I mean, our focus is, we target the 200 million plus blue collar workers in India, of which 30 million, represent the expected digital gig workers by 2030. There is an imperative to do this now compared to any time previously. I mean, we're, apart from the growing market, workflow digitization is becoming the new norm. So there is data around work activity. India Stack enables a full digital flow from KYC to document exchange to mobile payment transfers to data. And we also now have a new social security code in the making. So it's a perfect storm to start thinking about these new constructs. Moving forward, please. Yeah, so just to talk about the solution, this is what we do, and this is kind of the 4 pillars of innovation, if you will. One is, from a product and tech perspective, we underwrite on the basis of work data and a whole set of continuous stream data that we get. This allows us to underwrite both at the level of the individual as well as the transaction, and it maps to very flexible, personalized products that can be dynamically adjusted. Right, so credit limits can be switched up or down, based on upgraded information. Second, in terms of the business model, we think trust is paramount in this sector. We have an affordable and easy to understand pricing structure where people use, or they pay on the basis of how much they use. We apart from a subscription-based model, which is aligned with a life cycle value type approach, we also have other monetization streams that we build in through insights and through other services, cross-sell services. We distribute mainly through an employer and aggregator and HRMS type channel ecosystem. So that lowers the cost of customer acquisition and also helps us tap a repayment flow from payout, which we call reduction at source. And that also aligns with strategic goals with, for example, employers in terms of retention, in terms of employer productivity and engagement. And then lastly, we built a modular, platform, which, this sort of small ticket credit is the core, but around that, it allows us to offer or embed additional services like, investment solutions, flexible investments, for instance, flexible liquid savings, as well as, a whole host of purpose-driven commerce solutions such as, two-wheeler bike rentals, financing, servicing, tire replacement, and so on, which are highly relevant to our workers, to our workforce.
Badal, I'm gonna have to, maybe in 20 seconds, please wrap up.
Sure. I'm happy to stop there. It's so essentially, what it is it's a financial passport in the pocket. Through a mobile phone, a worker, connected to their employer or aggregator platform can very easily access a line of credit that becomes available to them, and that just adjusts automatically based on new, data feed, work data feed. Mm-hmm. And it allows them to access cash on a needs basis, mm-hmm. Which I think, again, from a social security standpoint, is not currently part of the ILO framework, but I think is one of the most important things that, every day that workers need for their everyday needs.
Okay, thank you so much. I think both Parul and Badal touched upon very important aspects, one of which is beyond, I think, savings for long term. There's a need for additional instruments to complement the savings. and the need for short-term liquidity for people perhaps to save long-term, and the importance of digital infrastructure and trust also in these kinds of schemes for people to come in. With that, please come in, Olivier, to make your intervention. Thank you.
Thank you so much, Meli, and especially thanks to Namita Data and Catalina Rodriguez for the invitation in this new area of collaboration between the IDB and the World Bank. Also to my colleagues in the panel, it's a great honor to be here. So let me start with the first slide saying that the name of the game next is flexibility. So there are many changes in the consumption, in communications, obviously in how we interact with the people, but obviously the next change is in the workforce. So this brings a change in the paradigm of how the labor market is organized, at least for Latin America. So where the social security systems have been organized through employment. So it's basically the typical model was having one employer and one employee, and they paying the contributions. Nowadays, people are staying in the same job for a very shorter period of time, and they have multiple jobs at the same time. So it's a very dynamic labor market, and the expectations that this is going to change in the future. So for Latin America, this is not new. So people have been working or using the informal sector all the time. And the key part is, as Badal was saying, is that the cash is the way it works. So is if the non-existence of cash will eliminate by definition the informality, but that's not possible. And that's why we think the technology is the key element, contrary to what happens in more developed countries. It's a key element to facilitate the inclusion of many people in the labor force, but also in the social security and the coverage of new products. Next, please. So for that reason, we decided to see what the independent workers are doing. The great majority of independent workers are informal, and we analyzed, instead of just saying this has to be done this way. So we decided just to start a step behind, and then say, okay, let's see what the people are doing, what they need to do, and identify the friction or the friction points where people are lost from being insured. And that we did this for many countries, for Chile, for Colombia, for Peru, for Mexico, for Argentina, and now for Ecuador. And that we are trying to identify what exactly is the tension points, and also what needs to be improved in the public sector in order to facilitate the insurance of these workers. So we have, as I'll show you at the end, where the publication is, but we identify many elements. But the key part is in the next slide, where we clarify what we have now and what will be the ideal changes in order to improve the insurance of independent workers and obviously the informal ones. The first part is the electronic registration. Many of the countries have developed these tools for every person to be part of the system, but that's not enough. It's like a window who not many people put attention to. So it's the scarce resource here is how people decide and allocate their time. So they are more interested in different things, except for insurance, except for social security. They have many things to think about, and that's why just expecting they will do this by themselves it's very difficult. The key part is how to aggregate the revenues and the income sources from the different jobs they have, to develop new products for the flexibility of their needs, and also the structure of their households. Identify ways to generate automatic discounts for payment of the contributions or of different schemes. And the key part also is, in general, social security, pension systems, health sectors they don't think in terms of all these decisions. So And that's why there's in many cases are not connected to the tax systems and the financial systems. And that's that we think from now on, it'll be really important to try to think in the person as the base of all the system, and also to identify and trace back all the income sources and to generate the total tax revenue and also the financial products that they can afford. Obviously, it also include the tax revenues. So in summary, what we can say is that we can improve the functioning of the Social Security for self-employed workers and informal ones by adapting Social Security of its current function. So many reforms are needed, but obviously the most important part, the first part, should be the administrative parts or the administrative elements of it. And design elements include like new plans for individual workers, how to use electronic products and behavioral economics or behavioral tools in these frictions that we identify for each country, and the complementary with other systems, because that will facilitate the lives of all these people. So I kindly invite all of you to see this publication. It's already in English and Portuguese. So basically it summarizes what's going on in each country, because we cannot set like one recipe for every single country. Thank you so much.
Thank you so much, Olivier. We have a few minutes for Q&A, and we've been collecting questions from the audience. Thank you so much for these very interesting interventions. I think each of them certainly address or aim to address the challenges on social protection for the informal youth. So I think one question that we have very quickly is what have been some of the key challenges in scaling the kind of interventions you talked about? And that is in the context of adapting to the rigid country regulations, for example. And also building on the example of gig workers having flexible contribution schemes is key. So, how can this be expanded as well, such as to, informal workers that are not necessarily gig workers all the time. So how can we access to these groups? Anyone volunteering to come in to address these questions?
I could take the first part on the scale, and I could give a multi-country example as well. I think what is very important to understand is what Olivier said, is that there is no one magic wand that is going to work for every country. And within the country also, there is not the one magic wand that's going to work for the gig worker and the farmer and the seamstress. It doesn't work like that, right? But I think the first barrier also requires a policy outlook which creates a conducive environment for each of these countries in their rules and regulations and the parameters when you set up pension programs. So a lot of the countries do not have much pension parameters outside the formal sector. So now that has started happening. A lot of the countries have different rules as well. And I think they need to be looked at culturally as well. So, for example, when we look at Africa, Rwanda came up with a new legislation altogether. Kenya already had one. Nigeria already has one for years. Latin America, I think, has been very progressive in this sphere as well, more than the rest of the world. Their pension penetration is much more. India has had a pension program since 2004. It has got about 30 million people in the scheme, but it's still a tip of the iceberg. Now, this also becomes a cultural difference because usually savings and adequacy of savings need to be looked at and addressed differently. You can have people with incentives open accounts, but they may not have savings flowing through it to reach pension goals. That is the one thing. And the second part is around awareness and education. So there are a lot of schemes that exist, but there are not much awareness given to such schemes that they exist for people to latch on to. And the third is, once people join the scheme, do they have the same kind of services the way all of us have at the touch of our fingertips, to be able to touch and feel the money and the savings that we have, which keeps people in the scheme and keeps them going longer.
Thank you so much, Parul. Maybe I can also go to Olivier. Olivier, maybe you can also answer. Like, I have a question. You talked about automatic deductions, right? In the context of informal workers, also including youth. Are there any other behavioral aspects maybe you could talk about to address the I guess, behavioral barriers to workers' myopia, particularly in the context of youth, right? Because retirement is too far from them. If you can stick to just 1 minute, I would appreciate.
Absolutely. No, thank you so much. Let me just say the key part is focus on the person. So in general, Social Security has been tied to labor markets and firms. So we now need to switch to persons and the income flows. And that's why the products, such the one that modalities is developing, is so important, because we need to aggregate income in order to create new products and insure people, and using a different products. And that's where a lot of innovation, there's a lot of innovation, for a lot of room for innovation in each of these sections. And that's why we divide it in this way. And that brings attention to the private sector to bring solutions that can facilitate the work of the public sector. But because at the end, what we want is more people to be insured, redistribute the risk, and obviously improve the lives of each person, such as our module says. So I will say, it's like the key part is not only automatic deductions, is in each of the key parts that we identify in the document, that we think there's a lot of room for innovation, and obviously for behavioral tools.
Thank you so much. Thanks. And I agree with you. I think we need to constantly build an evidence base to learn from the experiences, to improve these interventions and approaches to address this really challenging topic. And maybe I want to turn to Badal to pick from any of the questions that were raised, but also perhaps you could talk to us about the potential where countries adopt a design that also leverages earnings data to provide more realistic and flexible contribution schedules, right? Because I think the credit scores have been used for people to look at their ability to pay. But do you see any potential for adoption of this in the future by countries? Thank you so much.
So I come from a credit lens, so contribution and pensions is not really my cup of tea. But let me kind of modify your question in a way that I can answer it.
Sure.
In terms of, let me just talk about the power of earnings linked, earnings data, right? So again, if you look at India, we are 450 million in the non-farm labor force, right? Out of that, around by 2030 we will have around 200 to 150 million that are just linked to the organized sector, where you have they basically they're not, these are more, the large majority are still non-salaried, but they are there is they're on the radar, right? There is data around the kind of work they're doing, their tenure, their earnings, sometimes activity and performance, right? So and there's a whole shift moving from informal to formal, right? Gig, as well as contract, which is slightly longer term gig in India, which has been around for a while. So and we're talking about 150 billion, a conservative estimate of $150 billion a year in processed earnings for this workforce. So, so in terms of the data and the scale, right, to be able to use this data and to make sense of it is huge. Now there are a ton of ecosystem level and operational level challenges associated with how you use this data, how you understand it, clean it, standardize it, build an intelligence layer from it, and then apply it to various and that's kind of a journey that we have just begun, but we're very much on the tip of the iceberg. I mean, when we started, I mean, a lot of the data that we got, I mean, there were lots of challenges around how do we even understand, how do we ingest this data, how do we standardize it, how do we make apples to apples. So there is I think there is a huge at this point we're still at a place where we are demonstrating the value of the data, right?
Mm-hmm.
And that data, at least from a credit worthiness perspective, is we validated compared to a just a credit bureau score. There is a 5 to 7x boost in predictability when it comes to being able, whether it's a type 1 or a type 2 error around credit worthiness, right? And that's huge because I mean, like I showed in my early slides, I mean, most workers are new to credit. They don't have credit scores. Bank statements are sparse. I mean, even if we were to use bank statements, it takes a lot more time, and the experience of credit, which is timeliness, is a very important aspect of the whole experience, is killed in the process. So, work data enables a more effective and efficient credit access experience, right?
Okay.
And that is something that we have seen. I think the second part of this is really around creating frameworks and standardized protocols to ensure that there is a worker consent-based model to enable access to this work data for all ecosystem players that can then provide services. So what we are seeing in India, we have, I don't know if you're familiar with the construct of the account aggregator. What we were seeing for financially regulated data can very well tomorrow happen and should happen for work data.
Mm-hmm.
Right?
Thank you so much, Badal. Yes, I think, I mean, there is great potential, right? And we need to continue to explore. And I think, the points that you made are very, very well taken and certainly very relevant. We need to now close our session. This was a short session for a topic that is hard to address, and many countries around the world are having challenges to address this issue, but very happy to see these interesting and innovative solutions that aim to address, and hopefully that ecosystem will continue to grow to address this problem, and hopefully to provide solutions for the informal youth for social protection. Thanks everyone for joining. We're gonna close this session now. Again, thank you so much for the speakers for being with us and sharing their experiences. Thanks everyone.